My name is David. In this session, I'll be introducing you to managing leased assets. Many organisations lease assets such as real estate, aeroplanes, trucks, ships, and construction and manufacturing equipment. Leasing assets allows an organisation to gain access to assets while reducing the organisation exposed to the risk of asset ownership. Create asset leases to comply with IFRS 16 leases and FASB lease topic 842 accounting standards. If your assets are leased, then there's an alternative business process. You can capture lease information like lease terms and payment schedules and other lease details. Schedule the lease over its term. The system calculates the net present value, records the accounting for the right of use asset, and calculates lease liability for both finance, assets to be owned, and operating, assets not to be owned, leases. It calculates lease interest for finance leases and lease expense for operating leases, as well as depreciation for finance leases. There is seamless integration with payables. Your invoices are generated and automatically created in Cloud Payables with a clear source called Asset Leases. It calculates accounting in compliance with ASC topic 842 and IFRS 16. Use the task Manage Leases to create asset leases and calculate the lease liability and cost to be capitalized. Add leased assets to your asset book. Calculate periodic depreciation expense and interest expense on the lease liability for financial lease assets. Calculate periodic lease expense for operating lease assets. Generate periodic lease payment invoices with the correct distribution account. Schedule the transfer of lease payment invoices to Oracle Fusion Payables. Report and inquire on leased assets. You can also make the following changes to leased assets: reassessment to the right of use and lease liability for amendments to the lease contract, leased asset terminations, leased asset transfer or category changes, impairment of the finance lease. When recognizing financial lease expense, the amortization schedule calculates and stores the interest amount, principal reduction amount, and interest due dates for each lease payment included in the lease liability calculation. Interest expense is recognized in the period in which the interest due date falls. Number of leased interest expenses in the fiscal year depends upon the lease payment frequency. For operating leases, the lessee has to recognize a single lease expense that is calculated to amortize the total cost of the lease over the lease term on a straight line basis. Operating lease expense in each period is calculated as amortizing the remaining cost of the lease at the beginning of the period over the remaining lease term on a straight line basis. The remaining cost of the lease is calculated as net book value of the asset plus outstanding interest on lease liability. For finance lease expense, run the calculate lease interest and expense process for each period to recognize the interest expense on the lease liability in asset books. You can run the process from the depreciation infolet on the assets landing page. For operating lease expense, The calculate lease interest and expense process will calculate and recognise lease expenses. For either lease type, you cannot close the period without first calculating lease expense for all operating lease assets in the book. Thanks for watching, and please go on to review the video of how to create a lease.